and I'd like to call in Kerry, please. Kerry Arum is the Chief Financial Officer for Family Homes Funds, and Family Homes Funds is one of our sponsors.
Look and see if there are any opportunities for bankers to contribute to sustainable affordable housing in Africa. I think the pointer may be there. Or you transfer the slides for me from over there. Okay, next slide. Which is not the introduction, but you can stay here. Yes. So because that's also where we bring you greetings from Nigeria. You've heard so much about Nigeria. We are now the Nigerians standing on the stage. Thank you. My name is Nkiru Arum, the Chief Finance Officer for Family Homes Funds Limited. Yesterday, the MD CEO of TMRC and Shaq Bibi, Oscar and Habib, they told us about the importance of setting up specialized housing finance institutions. People remember, when the central bankers were meeting, FHFL is an intentional creation of the Nigerian government. We are that specialized housing finance institution that we spoke about today. We are a policy response of the Nigerian government to affordable housing to help the private sector. We recognize that Africa is observing FHFL. We were set up by a concept paper written by Alter, who's supposed to be somewhere in the audience or in the environment. I told him I was going to call his name. And we use the AUHF Conference as our annual check-in to let Africa know how we are doing, our plans, our wins, and our pains. So, of course, for the Nigerian government, we are called to update more frequently on a quarterly basis. Next slide. Okay, I have a pointer now. Good. Sustainable housing finance, like we've heard from yesterday till today, is critical to addressing the global housing finance deficit. So we all know this. Construction and housing sectors contribute significantly to carbon emissions. They keep telling us that if we should stop building, we will not. And knowing that the deficit is worldwide, it becomes important that as we seek solutions, we also seek greener solutions. It's important to seek greener solutions because Daniel and Patrick, I guess, have shown us that all the money is hidden in climate language. We have to speak it. Sustainable housing finance then is a function of house production price, tenure of the financing, and green. If you forget to add the green, you may not find the financing. Okay, so the question we as financiers have to answer is, how do we reduce the value of X? Remember that X is the price of a house. To fit the different income bands, the pockets are not equal in Africa, and I guess in everywhere. Then how do we find the finance, the capital that will be patient for 20 to 25 years at low interest rates? That's what we call accessibility. It has to be low interest rate. How do we reduce the housing carbon footprint, even into the occupation phase? We know there's a lot happening on carbon footprint in the construction phase, but we can do a lot to reduce it into occupation. So across the world, housing affordability continues to be a pressing issue. Sustainable housing finance will only be realized when the whole housing value chain becomes eco-friendly. Who remember Daniel's slide? That was the last panel. The damage is done before you get to construction. The damage is done at the building material stage. So for the housing value chain, for it to be eco-friendly and operate an efficient market system, and what does an efficient market system mean? It means that there is adequate supply and there is effective demand for green affordable housing. TMRC in the panel in the morning said they are trying to fix demand, but they find out that supply is still breaking. As a specialized housing finance institution, we fix supply and we fix demand. Or we try to fix supply and we try to fix demand. Note that it is affordability that will create effective demand. Like Maya told us, if you don't have affordability, you can be green, you can be anything, but people need to be able to take it off you. It needs to be affordable. For this to happen, we have to create financial systems and models and frameworks that support affordable, accessible, and environmentally conscious housing. This slide, everybody needs a copy to take home. Focusing on affordability to achieve sustainable housing finance in Africa, it is important that each country maps the population income brackets to determine the type of financing. I didn't say tenure, I said type. The type of financing each strata requires. In a strategy session a year back was when family homes realized that capital markets will not fix the first two levels. DFIs cannot fix the first two levels. So the type of money required for every band is different. If you plug in Forex into the first two bands, it won't work. They're not able to repay any money that is sourced in Forex. So DFIs are not going to help us there. Okay? Each strata requires, and I want to say that national emphasis for each country should be shifted to where the majority sits. It is ineffective to develop financial products for less than 10% of the population. Very ineffective. And let me give you a fun fact. In Africa, when you are mapped to any of these bands, they forget to map our dependents. The dependent ratio in Africa is much higher than anywhere else in the world. By the time they map your dependents correctly, the people living on your income, you may be dropping down one band. So you know what that means to the numbers at the bottom. The contribution expected of this gathering of experts is a housing finance product that will serve more than 50% of our population. Kesia, anything below that, we are not helping our people. One financial model will not fit all the income brackets. We need to be real. And one type of money will not serve all the brackets. We need to tell ourselves the truth. Reduction of carbon footprint on each home we finance starts with improving the backward construction value chain, what David Gardner referred to yesterday as the upstream. Daniel did a much better illustration of what happens before you get to construction, the building materials manufacturing. When we do not finance the beginning of a value chain, we struggle at the construction stage to finance affordable and eco-friendly and energy-efficient homes. You can't do that at the construction stage, you have to do it at the manufacturing stage. We try to do that in family homes, finance energy-efficient, eco-friendly homes, and we found that the people who can do it do not have scale. Daniel explained that better. I said, maybe they have one outlet, maybe they have one shop, and you want them to serve the whole of Kenya or the whole of Nigeria. It's not possible. So finance needs to go to them first. When we fix them, and then they can come forward to provide the construction teams with the right materials to do eco-friendly homes. In AUHF, we have recognized this fact, and we have set up an internal innovation team that focuses on the backward linkage to housing production. As simple as financing the local manufacturer of building material. Now, not the bank. You know, the money that goes to the developer, you forward 100% advance payments to the manufacturer. it makes a difference in the final cost of the home. Of course, there are risk mitigation mechanisms behind giving 100% advance payment. It makes such a big difference that we needed to explore that. We find the local manufacturers and we forward the money for all of his items that we'll be needing in the project. And we pay it up front and we get guarantees for the advance payment. Most of these production activities are operated by the private sector. When we say subsidies and PPPs, everybody's mind goes to the big framework. No, the private sector are the people that make the POPs, the paints, the bricks. There are a lot of things you use. So those production activities are operated by the private sector, and it is beneficial to align these private investments with green housing targets and goals. All of us know that we are migrating away from that kind of picture we have there, okay? So we can create green mortgages to encourage the purchase of energy-efficient homes. Maybe green mortgages are far from what has been described in the EU in the last panel. There's something as simple as bundling the cost of solar panels into the initial home price and creating a mortgage off the back of that sum, so that the off-taker does not need to spend a bulk sum changing his energy supply. You put it in the price of a house and we spread it over the tenure of the mortgage. It makes a huge difference. The initial high cost of installing renewable energy can be bundled into the cost of the home and financed for the mortgage tenure. FHFL, we are adopting innovative building techniques for affordable housing in partnership with federal agencies focused on technology and capacity building. We have other engineering agencies that are set up by the federal government, so we let them know where we want them to focus on the building and construction value chain, and they help us in doing that. Concessional financing is required for manufacturing sustainable materials in housing construction to reduce the carbon footprints of homes. FHFL promotes and trains in the adoption of these materials. Because these materials have not been mainstreamed, artisans do not know how and when to use them. So we also train in the adoption of these materials through partnerships and capacity building programs. When we focus on accessibility, discussing blended finance always points us to international DFIs, and I wonder why. African banks can help more. In my country, the board and the ownership of Nigerian banks are 90% Nigerians. Banks can create a pool of concessional funds from already declared profits. In case the money they have originally is from the capital market and is very expensive, on the second round, when you've already declared profit, you can dedicate a small percentage, 2%, 5%, 10%. You can dedicate this to economic activities along the housing value chain at any point that is of interest to you. Tertiary, we can also approach large local charity foundations to do the same. We have to start inviting them to these forums. Not only the central bankers. There's a large pool of funds sitting in Africa. In FHFL, we have built a bridge between the banks and the first-time homeowner by allowing the banks to remain in its comfort zone while we blend their interests downwards. How do we do that? We have a product called Help to Own, where the obligor enjoys the services of a first-tier bank while paying half of their costs. This we do by when we have the cost of the mortgage, we tell the bank to bring 50%, and FHFL brings 40% at 4.84%, less than 5%. So we finance 40% of the mortgage at less than 5%, and allow the bank to do 50% by their MPR plus whatever. They always say they can't go below the central bank rates. So we allow them to live in the world. So by so doing, we bring down the cost to the final obligor, which is the man who should enjoy the subsidy. And he pays half of the bank cost, but he enjoys the first-class service from the bank. So on real estate investment trust, here I want to refer to a 2017 CAHF study. Actually, I've been at this for a long time. There was a study on REITs in Africa in 2017 in 7 African countries. We also make reference to a 2020 refresh done by Altair, by Derek, Olu, Judith, and Wagan. They did a refresh of the study. It is important to always look back at our past works to measure our current progress. If not, we may be standing in the same place for 50 years like we had in the morning and we're not sure. The referenced works placed Africa's hope for REITs on WHC here in Tanzania and FHFL in Nigeria as possible platforms to develop such REITs initiatives. There may seem to be little movements forward, but a lot of work is being done backstage to develop and de-risk these products and make them fit for the African context. So maybe in a year, I was speaking with one of the developers how we can structure a REIT around these products just in the audience. So maybe in the next conference or two, we will bring in our progress on that. Family Homes Fund's business model operates 4 distinct financing funds, which uniquely targets and integrates the housing value chain for the delivery and demand of homes. If you attend this, you know we show this every year. You know, the funds are the Affordable Housing Fund, the Rental Housing Fund, the Home Loans Assistance Fund, and the Land and Infrastructure Fund. The land and infrastructure kicks in before construction, while the home loans assistance takes over after construction. Like we've heard many panelists speak, we need an end-to-end from construction to offtake. If you focus on supply, demand will clog your way. If you focus on demand, you will not have off-takers. So we have been able to build an end-to-end. The Affordable Housing Fund and the Rental Housing Fund focus on giving concessional finance at construction stage. Yes, yes. So what does this specialized finance institution called FHFL do? Okay, we hold this slide as the compass to the future of FHFL. We're only laying the foundation now. Okay, under the market development initiatives, you see a focus on housing material production. And this is key to affordability. Another initiative that will sustain affordability is the creation of social landlords, because the lower 50% of the income bracket will not be served by mortgages. The primary need here is housing as a service first, before we go on to housing as an asset. We may have to start with rent-to-own options, but they need a service first. Okay? Partnership, collaboration is what you need in this business because no institution can do all of it. And we conclude by leveraging partnerships and fostering inclusive finance and supporting green housing practices, we will realize the sustainable housing finance that we all seek in this forum. And I am honored to be chosen to moderate this discussion. And I have a crack panel. You will love them. Bonaventure is an accomplished director of retail banking at CRDB Bank, Tanzania. He has over 15 years experience in the financial services industry. He has a very good track record in crafting and executing retail business strategies, overseeing branch operations. They really have a lot of branches. Tanzania said no. He has been pivotal in driving sustainable business growth through strategic customer acquisition initiatives and has led the transformation of the bank's sales culture, significantly enhancing performance across the entire branch network. Bonaventure, please. We're pleased to have you. Get your questions ready for Bonaventure. I am also very excited to introduce Solofelo, my friend. She is the executive manager in the lending division at the National Housing Finance Corporation, where she leads a team that provides wholesale financing to housing developments and infrastructure in affordable housing sector. Is that not the person you've all been looking for? NHFC is a development finance institution that addresses the human settlement financing needs by providing various funding instruments to suit specific interventions and provide impact. She's powered. She has 18 years experience, having worked both in the DFI and the built environment sectors. Sofolo, welcome. So we will sit down and we will continue the discussion together. Thank you.
Yes, yeah, I see it. Yes. I want to keep the slide in front of everybody else.
Having laid that background, we start with CRDB in Tanzania. Bonaventure, do you want to tell us about CRDB in Tanzania?
Good afternoon, team. Yeah, my name is Bonaventure Paul from CRDB, working as a director of retail banking. Among the unit within retail is to oversee the mortgage. Specifically for the agenda that we have now, CRDB started its operations almost 30 years ago, and as we speak, is one of the leading financial institutions on mortgage. Specifically in Tanzania, our portfolio, since we started doing this particular product, we have issued mortgage loans of more than 74 million USD, which is almost 34.5% contribution in terms of the total portfolio that has already been issued to the entire market here in Tanzania. And as well, you can see, due to the good performance on mortgage in the other facilities, we went beyond borders. And this time around, you can see it's the only local bank that operates in Tanzania and the DRC Congo. On top of that, one of the things that we are proud of is also to be involved. Last year, we issued a green bond, which is the largest for East and Central Africa, total value of 300 million USD. Specifically, the fund that we got from these bonds, we are using it on the green related projects, including the green building, where all the customers who met the criteria of accessing the fund for building the green building, they are enjoying additional discount of 2% from their loan facility that they are accessing from our bank. So that's the little introduction about CRDB.
Yes, let's hear about the institution.
Thank you and good afternoon, everybody. Or should I say, Jumbo. Good afternoon, everybody. My name is Solofelo Ramosewa. I'm the Executive Manager of the Lending Division at the National Housing Finance Corporation, otherwise known as the NHFC. As mentioned before, it is a development finance institution wholly owned by the South African government. Our shareholder is the Minister of Human Settlements, currently the Honorable Mamelungu Mbai. We provide wholesale funding in the affordable housing space specifically. So we don't do retail, we specifically focus on wholesale financing. So we would finance property developers, we would finance social housing institutions, we finance landlords that are building to keep the stock and rent it out. We finance contractors that are building in the affordable housing space. And we also finance microfinance institutions who would then on-lend to individuals that are making incremental improvements to their homes. Thanks.
Are you able to tell us some of the models that have been successful in sustainable housing finance models to implement and have been successful?
Okay. Yes, no, thank you for that. So obviously we have implemented some of the models we co-funded with others, just to try and make sure that from a sustainability perspective, we remain involved, and we make sure that, of course, we are part of some of these transactions that are particularly speaking towards sustainability. Now, we've looked at green mortgages, although ourselves, personally, we have not done that, but we have engaged with a number of funders that are looking at green mortgages. And just as a typical example, recently I'm aware that the IFC has recently closed a deal with one of our commercial banks, our big commercial banks, ABSA, about a 4 or 5 billion rand deal to do green mortgages in the commercial space, particularly in the residential as well as in the commercial space. So we try to keep close to even those types of transactions that are ongoing. The most common transactions or financial models that we've been involved in from a sustainability perspective has to do with triple P transactions. And of those triple P transactions, just to give you some examples of what we've been involved in, we've been involved in developments such as Cosmo City in Johannesburg, where we built about 12,000 units, of course with other funders being involved as well, part of the co-funding initiatives. And part of that triple P arrangement involved the inclusion of government, of course, as part of the funders. It was a joint effort with the city of Johannesburg, Gauteng province, sorry, okay, there we go, Gauteng province, as well as a number of private developers, as well as other funders. There's also been other financial models that have been successful in terms of sustainable development, particularly in South Africa. We've had the Kuyasa Key Development Mechanism, which was done quite a while ago. This was in Khayelitsha in Cape Town, and it was really focused on improving energy efficiency in informal settlements. Some of the sustainability features there included solar water heaters, energy lighting installation, carbon credits that were earned and sold for additional revenue to finance the product. And this was a triple P transaction together with other funders, but also included the South African Department of Environmental Affairs, as well as the City of Cape Town. So those are some of the most common financial models that have been utilized for sustainable housing finance.
Thank you very much for that. Bonaventure, if we come to CRDB Bank, your bank is leading the mortgage finance sector in Tanzania. What factors do you attribute this phenomenal success to?
Thank you. I think mostly is one of my colleagues here who will respond to some of the questions. He mentioned about the issue of strategic partnership. So with us, we have several partnerships. And one of the, we call ourselves a strategic financing partner is TMRC, under the leadership of our brother Oscar, where we have been able to access the long-term financing, and using the same finance, we have been able now to reduce even the interest rate that we are offering. You can find in your markets, most of the banks were offering the mortgage loans ranging about 20% up to 25%. But after having the strategic partner like TMRC, now our interest rate is ranging from 14 to 16. So you can see a lot of people within Tanzania can now be able to access the mortgage. But on top of that, we have other developers whom we have the MOU, and we are working hand in hand to make sure that we are reaching more people who are in need of houses, starting with the National Housing Corporation, the like of Watumishi Housing Investment, DSSF, the Tanzania Building Agents. You can find, just to mention a few, but later on we also included other developers, the like of Fumba Town here in Zanzibar. You can visit, there are a lot of very good buildings constructed from the Fumba, but also the Zanzibar Housing Corporations as well as ZSSF. We are here with the general manager in the morning. You can see this is one of the critical kind of a move that we did to make sure that after entering with partnership with all these big players in the market, they have fastened the growth. The second item on the same kind of strategy that we took was CRDB Bank here in Tanzania, is to have the customer-centric approach. Initially, we had this product for mortgage, specifically for employees, the one that have salary every month. Those are the ones who were eligible to access the mortgage. But we extended that product just to cater for other segments as well. So you can see even the landlords, the one who just have the real estate, you have 2, 3 houses where you receive monthly rent. That one is enough to act as source of repayment, and you are now eligible to access funds for mortgage loan from our bank. We also went further to the business who just have a stable business, and we know for sure, yes, it's not a stable one, but at least every month someone is able to get a certain income. You can also be among the one who qualifies for the product. So you can see, just going deeper in understanding what customers need, we went further in developing a lot of products that fits our customers. As I said, also initially, even after focusing on employees only, but the type of loans that we were issuing, it was just for home constructions and the home purchase. We were not also supporting the issue of renovations, the equity release. All of them now we are issuing to our customers. So you can see we went beyond the normal practice of issuing loans for someone who wish to purchase. On top of that, we have the law that our government has played. The introduction of TMRC, you can see it has played little role. From the government as well, they have set a very good ground for us to be able to sell our products, to make sure that we are reaching a lot of Tanzanians, because we know the demand for the Tanzanians current, it's around 3 million houses. So you can see our average month year demand is around 200,000. So you can see our capacity, we cannot even meet the yearly demands. But on top of that, we have the cumulated figure of 3 million total demand that we also need to collaborate and have good investors in here to make sure that we are moving together. Also, the government has a good policy in terms of the land formalization. We have seen that from that policy, they have improved the process of getting the title deed. You know, one of the requirements in Tanzania for you to be able to access mortgage loan is to have the title deed, because without that one, the ownership can change anytime and the bank's money can be lost. The cost effectiveness now, people can access the funds anytime. The last one, I think, just after knowing the importance of these segments, it's unlike other financial institutions where you can find just 1 or 2 staff who is dedicated for this. For us, we have a full unit with more than 60 people who are dedicated from morning to evening. They are focusing on the mortgage. So this is one of the critical areas where the bank has invested a lot, and all of them, they are here. For you can see big number of people who are coming to represent the financial institution from Tanzania, they are coming from CRDB. So that's showing how important for us this agenda is. Thank you.
So, Bonaventure, I will still ask you that sustainable housing continues to be a major challenge in Tanzania even after the exploits and the help of TMRC. From the standpoint as a leading lender in Tanzania, what are the opportunities? There's every obstacle is an opportunity. So what are the opportunities and obstacles in advancing sustainable housing?
Okay, thank you. For us, yes, you can see in terms of challenges, these are the ones that we can say we are sharing in terms of challenges, but it's how best are you looking at it on a positive side and turn it into opportunities. As we can see, the issue of lack of infrastructure and services in remote areas. People are not moving to buy because in all the remote areas, the piece of land is very cheap. But once you go and build your house there, there is no hospital, no pharmacy, no anything in between. So everything you need to travel along the distance. So the infrastructure and the availability of the social services. What we are doing as bank, we are collaborating with different government agencies so that whenever a certain project that we are financing, we are making sure that it has all the required infrastructure together with the necessary social services around the area. The issue of
Thank you for realizing that we need to take a break. Shall we follow from South Africa perspective? What are the challenges so that we can get off the shares?
Yeah, I see Kesha's ready to give us her book. And I will keep it very quick. But yeah, certainly we do also have some challenges with regards to sustainable housing financing in the South African context. First of all, it has to do with upfront costs. We know that there is a benefit in terms of the operational cost. There's a lesser operational cost, but in terms of the upfront cost, that developer has to be able to finance the upfront cost either from a debt perspective or from the equity that's required. So that's the first challenge that we experience in terms of those upfront costs, and particularly because we're working within the affordable housing market. The developer doesn't always have the luxury to pass that cost down to the beneficiary or to the end user, particularly because, as we know, the end user affordability is quite limited. And in the South African context, still, in the National Housing Finance Corporation, in the gap market, we can only service an end user that earns up to 22,000 rands. So that limits you to be able to buy only a unit of about 600,000 rands. So if there's certain green initiatives that have been included that needs to be priced for, it already prices you out as an end user who's trying to buy in that market. And then maybe another one, and I'll just do three, but the second one has to do with high interest rates. That's a challenge. We're just coming off a high interest rate cycle. We've been at 11.75 for quite some time. We're now, in terms of the prime rate, we're now at 11.5. And this has a problem in twofold. Number one, it affects the financial viability of developments. So as you are trying to look at the cash flows of developments, they're not financially viable because the financing costs are high. But secondly, it affects the end user or the end user who's trying to buy a unit. Because of course, if the interest rates are high, then the affordability is low. So high interest rates will continue to be a challenge. And I'll just skip others, but go right to the end. What we've also seen is really in terms of funding green developments has to do with the lack of education that's provided to the end users. Unfortunately, in South Africa, we're still very much a brick and mortar society, and particularly in the lower end of the market or the affordable end of the market, they are not really familiar with some of the green technologies that don't necessarily understand the benefits that will come with those green technologies. Therefore, they view these developments to be more expensive without having to understand what the benefit is, and as a result, they just see them as less attractive. So really those are some of the challenges, but I'm glad that with today's discussions, we've not only looked at what the challenges are, but I think we've gone into detail in terms of what are some of the solutions that have been found in other countries and can be applied in South Africa as well. Thank you.
Thank you, my panelists and CAHF. You can see that all the work we've been doing over the years is bearing fruit. The institutions are doing a lot. They need more encouragement. We need more skill, but all hands have been on deck over these 50 years. Thank you very much for having us.
Thank you so much. You know, what I really found in here in listening to you talk, there is so much rich experience in what you're doing. And I'm going to say it again, we need to write it down and we need to share it and find ways to collect that data so that it can be shared across the continent in other contexts and still be understood. We'd really love to work with you on that. I think that the struggle of realizing sustainable finance that supports sustainability, it is very difficult. But between your experiences and then, of course, the experiences of the group, there are some interventions that can be made, but simply for the target market. So thank you very much for your inputs. I'm sorry to stand on the edge. Thank you so much.